Hey, what's up, everyone? Sorry for the delay. We had some severe, difficulties, but our expert producer, Dylan over here, got us through. As you guys know, I am very excited for this show today. I'm joined by the one, the only Hugh Hendry, and no, and as you and I'm like very excited for this show. I'm very excited to interview Hugh. Hugh is just has such he's just an interesting person. He's got such a great and unique approach to kind of markets and life, which I think will be really fun to get into. And of course, like all my interview guests, this is not philosophy, but we could just kind of see the application of philosophy to investing. Please, if you can, like and share the episode. As usual, big thumbs up would be a huge help. I mean, Hugh, we're just, be great to just get the word out that Hugh's here. Also, you can follow me on Twitter, as you guys know. Check out the website, subscribe to get monthly emails. Also, if you have any interesting guests who you'd like to see or show topics that you'd like me to cover, you can always email me at info@integratinginvestor.com. That's info@integratinginvestor.com. And of course, you could just fill out the contact form and I will for sure see that. And make sure we cover it. So, of course, as I usually do, I will just throw up the silly disclaimer slide. Not silly, I guess, but is what it is. So these are just not investment advice, personal opinions, not my advice, not Hugh's advice. You guys know the drill by now. It's right there if you have any questions. So speeding along here, apologize, but I'd rather get to the meat here. So without further ado, guys, we are joined by Hugh Hendry. Hugh is an award-winning hedge fund manager. He's got nearly 30 years of macro trading experience. He's also a founding partner of Electrica Asset Management. He's a St. Bart's investor these days, which is not, which I'm highly jealous of. Wish I was there. He also produces a regular YouTube show that is just fascinating, and I always watch it. He's a frequent interview guest on many prestigious investment outlets like Bloomberg and Real Vision. He's a provocative thinker about life, markets, pretty much anything. He's a surfer. I think I can say self-proclaimed pirate and a little bit of a fake Bono there, I guess. And really, what I what I love about Hugh is just he has a willingness just to challenge conventional wisdom in basically all walks of life, and that's definitely helped me kind of grow as a person. So without further ado, Hugh, welcome to the show.
I am I'm overwhelmed by your introduction, but very happy to join you and the gang.
Yeah. Well, welcome aboard. We have a chat up here. It's already pretty active. Thank you, MA. Thank you, Jonathan. We're already getting some super chat donations coming in. That is going to be a big help to the show in general. So, I mean, just to start off, I mean, anyone who's in the investment markets, obviously, you're very well known in the markets, Hugh. But maybe, what I always find fascinating is just hearing how you got to where you are today. I mean, and really kind of how you got into the business and your early years. To me, it's a fascinating story. I would, would love if you can share it with everyone.
Well, I intend to share that story more formally. I have been writing a memoir for the last 6 months, and we're at the kind of proofreading stage. I'm still a little bit unsure. The beginning, I mean, I was at the beginning, like from 0 to 21, I was just a weird, really, really weird kid. And I've kind of made reference in the past to the notion of living a life in reverse, the maturity that I want to say almost haunted me when I was young. I had no vices. I came from a poor part of town. I had loving and generous parents. But when I looked out of my bedroom window, all I saw were vistas of grey, and my young body and my young mind rejected it and was determined to escape. And that required maturity of thought. and channeling those thoughts and recognizing that education would be a passport. And then from then on, a series of events where, you know, is it Gary Parker was saying with the golf, you know, the harder I try, the luckier I become.
Yeah.
But a confluence of events which feel as if my life was, I was dipped in the fountain ink of serendipity, and things happened. You know, I started off at the age of 21, which is really quite young, as an investment analyst in the Scottish capital of Edinburgh, with very stern, old, wise men. Didn't suffer fools gladly. You had to know your P's from your Q's. Profoundly intimidating. And I was an abject failure. And it was profoundly miserable. 7 or 8 years. And if they had been, I don't know, if they'd been less successful, they would have fired me. And instead, I was just an embarrassing social experiment. And I left after 7 or 8 years, and I moved to London. And again, within a year or so, serendipity has struck again, and I found myself in the company of one of Europe's first hedge fund managers. That's to say, Chris Benodi. If you think I'm a character, I mean, you know, I'm simply I'm beige versus his shocking purple or whatever. But you know, the two of us were a bit of a combination, and now, like you say, I'll never forget the immortal words when he turned around to me and he said, "You're one of us. You're a pirate. Come and join, you know, our merry band, and you can't turn down such an offer." And then about 4 or 5 years later, really having been something of a parasite and fed on my very generous host, I felt, if you could do it, then you should, which is to say, if you can do it on your own, then you should. And so in 2005, I bought out the hedge fund mandate from that partnership, and I launched that, kept the fund in the continuity of the fund, because the fund at that point had the best part of 3 years under its belt, 3 very good years as we captured the emerging commodity bull cycle. And you know, here we are, fast forward, ran that fund for 15 years. And at the end, I'd become, it was less joyful. I certainly had passion. I think I will be the most passionate member of the cemetery, but I was joyless, and it was time to take a breather. I spent 2 years in a cave in Paris, hiding from demons, and then I re-emerged just as everyone was moving into confinement. And so I've used the theater of absurdity, which is my YouTube channel and my Instagram and my Twitter, to be myself. I want to say, after that long journey, the best thing about my life today is I'm kind of happy in my own skin. And forgive me if you look at me saying, "My God, this guy, who is this guy? And he's disrespectful. And look how he's dressed." Yeah, I don't mean to be disrespectful, but I ain't dressing up to be something that you suppose that I'm meant to be. This is what I was meant to be. I spent my life dressing up with ties and suits and black shoes and my hair combed, and you know what? I've a life full of that. And my life now is very, very different, and I've pivoted. I'm a creative person. This is a very outdoor, tropical life. I feel engaged, 10 years younger, like Benjamin Button. I really am accelerating in the young principle. And the creative pivot, I'm now like an architect and directing and building these beautiful houses on this beautiful island, and happy to welcome lots of you beautiful people.
Yeah.
So that's my story.
Yeah, I mean, one thing I've taken from your story, and I've heard it a couple times, and is just the perseverance and the self-confidence to kind of believe in yourself and just do it. I kind of get that sense from you where, you're, I guess, it's like you said, you're a bit unconcerned, and there is just you're just going to live in your own skin. Do you have a sense where that comes from? Is that always been with you? Is that something you had to cultivate? Because, even with your investment style that we can get in a little bit, and I guess St. Bart's fits right into that, it's very, it's very sort of authentic.
I thought you were going to say phony. My favorite word when we come into this arena of discussing investments is absurdity, and more than absurdity, actually. One of my favorite terms is oxymoron. And yeah, I used to have to say to people, I'm not a moron, I'm an oxymoron. A contrarian trend following investor.
Yeah.
It's kind of like an oxymoron, and by that I mean, and directly to your question, I am an extravagantly introverted extrovert. Or let's put it another way, it takes me a heck of a lot of time and a heck of a lot of work to appear spontaneous. So all of that self-belief that you're referring to, I tell you, it's like the dark tales of comedians. The yin and the yang, there's a symmetry in life, and for all the light and the happiness when you can be on stage and people get your shtick, okay, when you're off stage and you're on the train going home and it's just you and it's those internal demons, so I don't want to I would wish to gloss over that. I would wish to presuppose I was anything other than a tortured soul. I tell you, sport is actually very, very, very revealing. And tennis, as an example, I have given up on the game of tennis. However, I am very much into pickleball, which is really mini tennis. It's about the court size, about everything dimension-wise, from the height of the net to the court size, is about 2/3 of regular. And I still, even with the downsized version, I'm so stiff, I'm like robotic, and I squeeze the racket, and it's those internal demons. I am like, I was wired to worry. I do yoga. Like, people go to yoga to become flexible. I become rigid. Again, I'm an oxymoron. To the tennis, and forgive me because I'm still munching on a burger, a vegan burger, as we said. I discovered
there's that oxymoron.
And talking of oxymoron, I've discovered the best addition to playing pickleball is, so we play French rap music, and I'd recommend NTM. I won't tell you what those letters stand for, albeit in French is nique ta mère, but I'm sure there are not many French people listening and being very shocked.
Maybe.
And we drink tequila, and the more tequila I drink, the better I become, because I get loose. And so, like I say, my life is one of preparation.
Interesting. Yeah, that's super interesting. And like, you mentioned something that I've noticed, at least as from other discussions, is that that contrarian trend investor, like that, because I'm kind of working through my own framework. In fact, that's like what my blog is. It's just one big sort of, for organized sort of mental vomit of how to become a better investor, because it's such a mind game, as you know. And I think people look at you, or maybe listen to you and think you're wild and you're out there and you're contrarian. So like, but also you have this trend following sort of quality to your trades, and I think like crypto actually kind of fits right into that, where there's like a like a fidelity, for lack of a better word, to reality, right? Like you're not out there to be out there. Maybe you're out there when you see something different, and when you're not, you kind of when you want to ride a trend. Can you kind of I don't know if I'm babbling here, but can you kind of like talk about how you kind of marry those two kind of thought processes together? Because they're very different. Not like me personally, I have a really hard time doing both.
Mm. Well, first of all, congratulations to the work you're doing, your blog and stuff. It's I think it's excellent. To the point, I guess I practice playfulness. I do this. So remember, I was co-managing a hedge fund from 1999. It was 22 years ago, which is a long time ago. And hedge funds existed, but not in the manner, not in the quantity that they exist today. And the principal boost to the hedge fund community was the trauma of the NASDAQ collapse from March 2000, which exposed the naivete and the lack of investment management acumen to deal with these rare but very devastating events. And people suffered from the rigidity of their thought process. The troubles that I had in Edinburgh were not a function of the company. I was working for like one of the most incredibly spectacular investment management houses in the UK. I mean, at the time, they were responsible for $3 billion. Today, it's probably closer to 300 billion. They were one of the initial big investors in Tesla. You've got a book profit more than, I think most of it realized, of 40 billion. So there you go, like 12, 13 times book profit on that versus the AUM when I was working there.
Right.
So very successful, but doing things, if you will, and I don't mean to belittle, I mean, how can you belittle that at all? But without the playfulness, a rules-based structure, I would flippantly call it the Taliban. We read scriptures, we copied scriptures, you just spent all of your time reading and writing. And I was, I'm a kind of tequila and pickleball kind of guy. I would put these, it was like a nightmare. Like on your desk, you would have to you bring down this pile of documents and whittle it down. And it would take forever, giving it due consideration. And you would think, right, job done. And someone would arrive and the pile would be back. So I would eventually, like when no one was looking, I'd put it into like black disposable bin bags. And it was like really heavy. It was like trying to carry a dead body out of the building and not be caught. And then I put it in the local I'd hide it in the local park. That's what. So it was. I had to discover and I had to invent softer, absurd rules. And let me tell you specifically why.
That's interesting.
We haven't seen the future. Again, it is profoundly absurd to claim anything about tomorrow, never mind 1 year's time. Or arguably, once you go 10 and 50 years in terms of predicting where markets will be, there's actually there's a greater rigor. But in terms of the variance and where you're going to be in your expectations between now 12 months out to 5 years, you're going to be all over the place. So playfulness being playfulness and the exposure that I have in front of the camera captures passion. I'm a passionate person. But then finally, so if you are willing to subject yourself to ridicule, if you're subject to be playful, you do still, again, there is a yin and a yang. There is that introverted extrovert. And so you kind of need, I was going to say hard stop. I think hard stop's to overdo it, but you need to call a friend, right? It's like, hey, look, I'm crazy, but I'm thinking this is what I want to do. What do you think? And that's to say, in your chart program from Bloomberg to some of these wonderful platforms which are free on the internet, you put the stock in and it's like, boom, okay, it's going up. It has a clearly defined trend. And then, grades of common sense above that. From time to time, we will suffer mean reversion. And mean reversion will take you to very common resting points. The biggest mean reversions will take you to kind of 1 year moving averages. And that can be very painful. And so there's just a kind of, you've got to be a calculating game player with a smile. And again, finally, if you play the game correct, you never fear losing. It's backgammon. I lost. I lost with a backgammon. Who cares? Let's play again. Yeah. As long as you have the ability to reload and play again. If you get it wrong and you lose the ability to reload, I suspect you weren't playful in the first place. So.
There's so much there like that. That there's in your statement, it's so pregnant with philosophically pregnant in my view, because there's a willingness to challenge your own notions. You could call it playfulness, but the playfulness is it's not whimsical in a sense, right? And maybe there's a whimsicality to it, but it's very much look, let's play around with this. I kind of know where the rules are, but let's find the boundaries, right? Let's find the boundaries. And you know what? Sometimes you're not, when you're in a hall of mirrors, you find a new path through, right? And you learn new things from that. I can definitely relate with the call a friend thing. I mean, that's why I started my blog, because I had all these crazy ideas and I was like, no one, like I don't have a dog, so I need some way else of putting this out to the world, and just being like that little, just someone tap me on the shoulder and tell me if I'm crazy. I don't claim I'm right. I just want to know if I'm crazy. Like someone just tell me if I'm crazy or if I'm not. So I could definitely relate. Now, I have a ton of questions, but I did get one coming in from our chat. This is coming from MA who donated. Thank you. I always butcher her name, so I call her MA. She says, you express yourself wisely and delightfully, but how did you actually learn about hedge funds?
Well, today I am every Friday I release a podcast. I don't have the great courage of you yet to do it live. That is my ambition. When we finish this, I will go back to editing it. But to that point, I amassed 15 years of investment letters. And I like to think of them as who Ace Greenberg. Was it Ace Greenberg was the chairman of Bear Stearns. And in many walks of life was a mathematical genius, and he was an eccentric character. And seems that you have to go back in time to find those eccentric characters. We seem to be less populated in today's financial markets. Today's financial markets seem to be grayer. And then when you go 70s and you bring up Jimmy, Jimmy Rogers, fine, but Jimmy in his heyday, let's celebrate who he was. And so I like to kind of reflect like this week we're stuck at the tail end of the summer of 2005, and it's kind of what did those market trends look like? Because we know what happened next, but what did they look like? What were you thinking? What were you getting right? What were you getting wrong? And this week, the S&P I launched my hedge fund kind of pretty much at the bottom of the tech crash about October 2002. And mean reversion, things recover,
right?
And there was about a 50% recovery in the S&P, and then for the best part of 2 years, from the kind of like from March 2003 to kind of into June 2005, sideways. Now, and I explain how I liked what I was seeing, the chart formation. I try and explain the macro behind that. But I was 75% net long. And again, to the question, so I'm interviewed by an old investment partner and colleague, and he says, well, but why was 75 the optimal figure? I didn't know. Like there wasn't a rule book back then, and your reference guides were interviews with the classics. And so I probably had a bit of I was like a light version of Soros Druckenmiller. You know, the thing, trend, profit gives you the legitimacy to add more leverage. And with trend, and the hope of avoiding a sharp mean reversal, then you can book gain. But as you lose gain, as you lose altitude, you know, like you're throwing things off the side. Right. And the wisdom that I had was that I recognized the need for a fleet of foot, like rapid reaction, and that could be an issue for me because I was always on the edge of tomorrow, on the edge of maybe, in anticipation. So I was trying to find not the stocks which dominate the market today, but the stocks that could go on to be accepted by the general belief system in the years ahead, which is to say they were unloved, and which is to say they didn't have the volume of liquidity to trade. And so I would have to compromise, and I was like a centipede, and I would build positions. I would, if I had a theme, let's say gold and gold shares, I would own about 30, 40, 50 of these things. Right. So that I was constantly chopping legs. I recognize if I'm a centipede and one leg gets trapped and I've got to kind of saw the thing off, I'm going to kind of do it pretty rapidly. If it's me with just two legs and I'm kind of stuck, I got to go, I don't know. I like, as you procrastinate, your P&L gets worse and worse. And you got to remember, one of my mantras this year is successful investors dig shallow graves, right? The grave analogy is to say you're going to make mistakes. Yeah. The grave analogy is to say you're going to record losses, right? Okay? But you're going to distinguish yourself by ensuring that you're not buried by those losses. Like I've seen people rise from shallow graves. I haven't seen the inverse. So forgive me, I have nothing scientific in order to respond to what is an excellent question. But by hook or by crook, I worked it out on the fly.
You just experimented, man. You lived it. In other words, you wrote the book. And, one thing, that really strikes me too is that centipede approach, because that is almost like a paradox in the way how you employ it. It's not like you are, and correct me if I'm wrong, if I'm misunderstanding, but so there is like a concept of having like a concentrated portfolio, right? Where you're just going to make some big bets, and live and die by those big bets. You are making a big bet on a macro perspective, but using a lot of different vehicles so that you're almost protected. So your big trade is still your big macro concentrated bet is still protected by all these like little centipede legs. Is that kind of the right way of thinking of it?
Yeah, it's not far from the reality and from the objectives I was pursuing.
Yeah. I mean, it's not just like having, seeing in the business, it's not like having a fund with like 1,000 different line items in there, which don't really, if I'm like a large cap equity manager XYZ, and I've got 1,000 positions, like they don't all necessarily relate to a theme or anything. They're just kind of in the book because they're in the book, right? But your approach is very different than that. At least it sounds like that from my perspective.
Definitely. Well, it's again, one could say it's a form of emotional intelligence. We are dealing with belief systems. We're dealing with intangible things. We're dealing with like a religious cult. I mean, it's a religious cult. And I always, if I'm going to have to star or feature in a religious vehicle, it better be the life of Brian, which is to say, it's better if you don't take it too seriously, right? And so the emotional intelligence was the ability and the absolute need to absolutely reject everything that I held dear today, that I could turn 180 degrees and do the opposite. I recall, heavens, I want to say maybe towards the end of March 2003, and again, naivete. I mean, I'd thrown everything at the gold sector. I had the gold mining shares. I had the royalty guys. I had the gold futures. I mean, I was Charlie in Wonka's factory, and I had my gold token, and I was going to not make hay. I was going to swim in chocolate fountains, if you will.
The chocolate river. Yeah.
The chocolate river, and gold slipped away from us. The gold went below $300. And I'm like, what's happening here? And the P&L, and I'm in my first 6 months, the P&L blew up in my face. I remember having a luncheon in Monaco with some gracious host, but a multi-billionaire who was keen to learn more about the gold sector. But given the security, I had to, I was like a drug dealer. I had about 5 telephones, pagers, and what have you. I wasn't a drug dealer, but I had the appearance of such. And that all had to be, the paraphernalia had to be left at the entrance. And when I left after like 2 or 3 hours for lunch, I swear I had 78 missed calls from my trading desk, which is to say gold opened like, I don't know, it was down 3 to 5%. We were like 2-3 times left. We were being crushed. And I took a helicopter from Monaco to Nice airport. I never travel helicopter. I was like, I'm a dead man walking. What's the worst that can happen? Like the helicopter goes down, I'm down already, But I got back to London.
Story in a helicopter.
I closed the position. I got to London, and I was the chief disciple of the gold faith, and I closed it all. I was like, guys, then I closed it like, right? I spent 2 or 3 weeks then building a position in a manufacturer of, I describe their business as manufacturing prophylactics for sausages. I kid you not, sausage skins. And it had a glitch. And so I can occupied my mind just discovering this great business, which had fallen 80-90% on the basis of a glitch, which could be redeemed. And then after about 3 weeks, I then turned around to my team and I said, okay, right, let's buy all the gold position back. And they're like, you're crazy. I'm like, but buy it back. Yeah. And we went on and we made 50% that year.
Wow. That's incredible. I mean, that is a, personally, I really struggle with that flexibility. I mean, call it emotional intelligence if you want. Yeah. I mean, I don't mean if you want, I mean that pejoratively, but like that is a lesson that I am really I personally really struggle with. And like, I'm finding ways of kind of working around it, but it's really, I mean, like you said, like it's so crucial to this business because you're telling the future and it doesn't matter what model or what zigzags you draw on a chart, like nobody knows the future, like you said, right? So we're all just kind of doing our best guesses, and to recognize that it's a guess, or hypothesis if you want, and to just have the maturity to realize that is really a skill. Another thing I've heard you talk about is kind of the art of structuring. I wonder, I know you refer to yourself as a pirate. I kind of think of you as more as a Picasso in kind of the way, or Da Vinci is maybe a better word, and like the way how you think about structuring a trade. And I think you kind of touched upon that, in the gold story. But I was wondering, how did you learn how to structure trades? How important is it to the way you think? How much time do you think about kind of structuring trades?
A great deal. And I think I want to embrace the inner Picasso, like when you see some, the avant-garde nature of that stuff, like to an audience, deeply trained in another school of thought, the kind of jarring juxtaposition of kind of what is this, I think is, I always, and clearly I am not a Picasso or any great artist, but I did lay claim, I felt more comfortable in describing structuring and process via the lens of an artist, of starting with a blank canvas and trying to sketch a macro narrative. And again, a macro narrative is nothing but a belief system which is not widely recognized, but which might be adopted by the many in the years to come. And I like that notion of the blank canvas and seeking wealthy patrons to support that narrative and that picture and that image, as convoluted or as dark or as optimistic or otherwise as it may be. So I very much favor and have the courage to say it's art. It's not science, and there's a false security that comes from. I would not dismiss VAR, and believe me, I believed in having an intense dashboard of give me metrics, talk to me, talk to me, challenge me. But structure was a fascination, and you can sometimes you get structure wrong when you find you have adopted a portfolio which is overtly complex. Keeping it simple, I think, is the best structure. And so, like, one of those things when I look at my positions, when I go back and review those investment letters, this whole long short thing, I don't get. Right. So what you find, what we were revealing in today's podcast, this week's podcast, which I called, what did I call it? I call it the Marxist capitalist, is that we made a ton of money. Like the attribution on the longs was like that, right?
Yeah.
The attribution from the shorts was like that, and this is the zero line. So it was consistently loss making, and I'm sure that is not idiosyncratic or specific to me. That is the nature of the beast. And so, do you need shorts? I mean, shorting is a profoundly difficult enterprise, and the risk reward on it is diametrically opposed to being long. Yeah. And if you have the idea of shorting something as a risk measure to protect a long book is quite frankly naive and misguided. I have a personal holding just now in Nokia, which at one point, was the owner of the seller of the greatest number of mobile phones. It was the most highly rated technology stock in the world at the turn of the previous century. Right. But at the same time, it retains what would you call it? These mobile phone, the emitting, the 3G, 4G, the 5G, the incumbent 5G thing that's going to be rolled out at billions and billions and billions of dollars. And I know for a fact, long short guys will short Nokia to protect a big risk position in Ericsson. Right. Ericsson kind of normatively feels probably a superior business, a more rounded business, but just own maybe a little bit less Ericsson and have no short. For me, I mean, there's about 6 or 7 or 8 or 9, 10 of these stocks spread across the world. That's what I would favor. I'd have a little bit in each.
Yeah.
So that's what I mean by structure.
Gotcha. Yeah. I mean, I guess a lot of people look at shorts as a way to lever your long positions, but I guess in your perspective, it's just not even worth it. Just, if you're going to do something, right?
Yeah.
I just got maybe like two quick questions here because I want to be respectful of your time and
no, I don't mind too much.
Okay. But one thing, like do you still? I'm just dying. Like, how can I get a Hugh Hendry hat? Or maybe I should get a Seth Levine hat or something.
Well, indeed, I can foresee a day when we all wear hats with our names on it. Now, whether that's a good thing, I mean, I think that's coming first in China. Albeit they don't need it. They've got you cornered with your mobile phone. Come to St. Bart's and get one. Well, I'm really kind of intrigued by this whole, dare I mention, crypto, but I'm intrigued by this notion that the speculative function, which seems to be inherent in crypto, lends itself or could lend itself into being the pivot for our society to escape what has been a kind of mild form of the 1930s. We've had a kind of mild depression since the great financial crash of 2008.
By that, do you mean
And
like economically, or do you mean like politically from a like authoritarian perspective?
well, it can
Or
mean
both?
all of that. But
Okay, good call.
when you mentioned the hat,
Yeah,
um,
yeah,
I'm 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 very intrigued by this notion of selling things in the metaverse. I'm very intrigued by a new I don't know, is it ZYX, but whatever, the present um, kids who are on the cusp of changing the world find themselves with no assets and unable to afford regular assets like the first apartment, etc., and are consoling themselves by spending hours in this virtual world.
yeah,
And the virtual world, identity is as important in virtual as it is in reality. Um, we easily spend $50, $60 on a t-shirt which costs like $3. Why? Because we want to align ourselves with a particular tribe. We want to make a particular statement. It's the
sure,
same thing online. And there you have, you remember in Europe, the largest company today, largest capitalized stock in the bourse is LVMH. And you have this back catalogue of design, which is been and gone, but actually can be reinvented and sold to
sure,
these
yeah,
kids and then sold on and sold on and on
yeah.
again. And, um, so I would love to sell you a digital version of this hat that you could wear in your metaverse. And
Yeah, that's interesting. Yeah, I've noticed how you've in some of your recent interviews, you've really dove into crypto. I've been, I think my view of it a little bit. I'm kind of dancing around the edges in it. I still don't. I see it more as a venture capital technology play more than the kind of the money play personally. And that's you could have me
by
on your
money,
show to
you
discuss
mean,
that.
no, by money, you
But
mean what, the fiat money and as a competitor to central bank money and all
yeah, and
that
the
stuff.
store of
And I think you're
value.
right. Yeah,
Yeah,
store of value, don't know. But precedent's a big thing. This is the
yeah,
new kid on the block, and it's easy to fall in love with the new thing.
yeah.
But the thing that I respect is longevity, and
Right.
so
Yeah.
yeah, gold has its flaws and whatever, but that damn thing has just worked. It just worked over generations and thousands of years is worked.
Yeah.
Um, Bitcoin might go on to do that. We'll see, but we don't know that. It's an unknown.
Yeah.
So yeah, that's why I'm in. But presently, it is. I'm intrigued by its speculative nature, not by its store of value nature.
Yeah.
Yeah,
Me,
and
me,
I'm
me
just
too.
yeah,
Yeah.
yeah. So
That's a whole different. I don't want to go down the whole
no,
crypto
no,
world.
no, no.
That's a 2 hour show, and I want to be respectful of your
Yeah.
weekend here. Do you still consider yourself a pirate these days?
Oh yeah. Oh yeah. Oh yeah. The
You
the my new pirate venture is calling myself an architect. Um,
I
uh,
like it.
the
Yeah.
and I'm stationed in the Caribbean. I am a
That's
pirate of
true.
the.
Yeah.
Believe me, there are a heck of a lot of pirates in the
Yeah.
Caribbean. Yeah, and my first house, I was like, I bought that back in 2012 in terms of over here, and so I was still at the kind of at the maximum level of my AUM,
Yeah.
and swinging like across 5 or 6 funds about $1.5 billion, and I was engrossed by that. And I found a charismatic kind of French guy. He claimed to be an architect. He wasn't, but he called
Yeah.
himself an architect. So I'm like, screw it. Thankfully, my force of personality intervened, and I managed to kind of design a perfect house. But yeah, I'm a pirate today because I'm like I'm working with some kids and back to the metaverse. If you can achieve astonishingly good virtual realizations, you essentially can be an architect. You're like, this is what I want, and you sit there for hours with these kids, and you create a metaverse which matches with what you then. Most kids are putting things into the metaverse.
Yeah.
I'm trying to take it out and make it. And again, you said St. Bart's could be like a macro trade. It's many things. It's the Truman Show. It's like I get to live in the asset. I mean, I'm coming here from from Maison Blanc Bleu. This is a commercial property. We rent this out. We rent it out 25 to 30 weeks in the year, and then in between time, I get the great luxury of staying here. And even then, I was then designing in a metaverse and then taking it out into reality. But then once you've established something, we've had rock stars, we've had Hollywood A-listers, like sports stars. This is where you come if you're successful. Right. You come because there's a peacock thing. Like, hey, right. Look how damn great I am. You can't do that on a private island. No one sees you. You got to be with a peer group that goes, Father, you've done it again. But then what if you can then take it and you can do kind of like virtual timeshare back into the metaverse, where you're sitting in some godforsaken place, in Warsaw. I mean, Poland always seems to be grey. Forgive anyone who's Polish, but in my head, I've been there a few times. And whatever. But and imagine that you're spending like 4 hours online. You're like, you want the background. I mean, look at the state of the place behind me. We had a party last night. But I want to rent in the metaverse. I want to rent 3 hours at your villa. Done.
Yeah.
There's just things happening today. The realms of what are possible seem to be expanding, which is always something which intrigues me.
It's interesting because I could probably talk about this for longer than we have. I've been thinking about the metaverse a lot from your interview on Real Vision, which if you guys don't subscribe to Real Vision and you're interested in investing, is fantastic content. But I'm like really struggling with this in that, or playing with it, I guess, just to, stick with the theme here. I actually want to spend less time online. Like there are all these social media, YouTube and Twitter and Instagram and whatever, Clubhouse. Like I find myself really pulled in these, in all these different directions. And, I almost find myself wanting to come out of those because, from a, even from a selling perspective, how, think about where you are, right? St. Bart's, like they want to be seen at St. Bart's, right? Because it's so exclusive and there's scarcity value, I guess, to the beauty that's there. You're almost going like, you're almost slumming it in the metaverse, right? Because almost anyone can create anything there for the cost of almost nothing. So I don't know. I kind of struggle and play around with that.
Yeah, but remember, we're not that generation. It's those who are
that's true
who are following from us. We're kind of irrelevant. I'm just simply intrigued by the chance of making another dollar bill.
Yeah. I'm just a college ticket at this point. Just make it to that last tuition bill, please. Pirate wise, are you more like a Captain Hook or are you more like a Somali AK-47 guy?
That is the prism of distorted reality that the person that we're convinced that we are very rarely is that the same person that those who work or engage with us very closely perceive us to be. They tend to be, in my case, polar opposites.
Okay, interesting. Maybe just my last question here. I like to ask people this: what do you do? You kind of touched upon this, but when you're not investing, when you're not, you're not into your business in St. Bart's, I guess what do you do? What are your hobbies? And do you find any parallels with investing?
Well, a parallel with investing, I do find that REM, the dream function is the unconscious mind being processed. The internal computer bank's just like playing everything back and just asking questions. And I find that hobbies, or I find that downtime um, is replete with the same opportunity, from reading to just being engaged in physical activity. Um, um, I find that the harder the activity, the more I kind of decompress.
Yeah.
It's like my tennis gets better with the more tequila. It's like, and my ability to link neural pathways and investment problems that had lain there unsolved. Suddenly, boom,
Yeah.
a solution. And I used to find that literature, and by literature I don't mean necessarily some 17th century
Right.
book or whatever. It could be Vogue, it could be whatever, but some well constructed language I've always found to be a remarkably
Yeah.
good key for unlocking the mind, in order to and there's a podcast I'm going to do with an amazing English um, professor. I think he's in Minneapolis, and he maintains that actually literature and reading, that it's the ultimate virtual reality game. It's and then we were talking about it at the beginning. Hey, how do you learn how to manage a hedge fund? And I think one of my answers was kind of gleaning an impression from reading about it, from Jack Schwager to the Jesse Livermore stories to interviews with Soros and Stan, etc. And he was saying, that's the thing. Literature it creates virtual reality. You become the central character, and you find yourself trying to make the decisions that the character is making. That's very, 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 very powerful for how we do things. So here I surf. I've got some fun cars, big Defenders, the British kind of rugged car. I've got a little French de Chevaux. I put my board. We go out, the paddle tennis with the tequila, and I like music. I like having fun. I like people.
Yeah, that's great. Hugh, I mean, I'm gonna wrap it up here. I mean, that was awesome. Maybe kick it over to you to one for a last word. If you have a last word, where can people follow you these days? Kind of track your work. Anything.
Hugh Hendry. Official. I had to add official. So Hugh Hendry official is my channel on YouTube, and heaven knows what it is. Hendry _ Hugh or something. I mean, Twitter's is a law unto its own, but we've got a big community out there. And then I like Instagram. Call me an idiot, but I like Instagram. It's kind of fun. Don't like Facebook, but and I use every possible means. I use DuckDuckGo. I use everything to kind of conceal this whole idea of like our brains are being sucked out by the artificial intelligence. I mean, listen to me, I'm alluding. I mean, I'm not into the vaccine. I'm not into sharing my data with global technology platforms. But yeah, you can find me on Twitter, Instagram, and YouTube under the moniker of Hugh Hendry Official.
Well, there you go. You're the introvert extrovert, I guess, or extrovert extrovert. However,
I'm the remember, folks, I'm not a moron. I'm an oxymoron.
An oxymoron.
That's going on my gravestone.
Yeah. So with that, Hugh, thanks a lot. Thanks a lot for joining us on this episode. I had a blast. I love listening to you. I'm just flattered to have the opportunity to talk with you. I want to thank everyone for donating on the super chat. MA, thanks a lot. Thanks a lot for your question. Jonathan, always a big thank you, supporter of the show. Chris, thanks a lot. Everyone, thank you for joining us on your Friday. Hope you guys have a great weekend. Again, Hugh Hendry, check him out, Twitter, Instagram. Check out his YouTube show, his podcast here. shows are they're just a lot of fun to listen to. And of course, yeah, sign up, follow me all here, and guys, we'll see you in the universe and the metaverse. Take care.